Hi, my name is Shaily Patel. Today I'm going to present Amazon companies, cost of debt, cost of equity, and the cash flow estimations. Let's start with the Amazon companies beta. In this, I've downloaded the Amazon's company adjacent close beta from the Yahoo Finance website, and in that from the historical prices. I downloaded the adjacent close, and I downloaded S&P 500 adjacent close, which is the GSPC. Now, in order to find the beta and the I-squared, we need to find the return of Amazon and the return of S&P. So, in order to find the return, we have to deduct the previous years minus the current year divided by the current year, and we have to apply this formula to all the Amazon's adjacent close, and the same formula we are applying to S&P adjacent close. And once we get the return of Amazon and return of S&P, we apply it to the slope in order to get the beta. For the slope function, we have to put the return of Amazon on y-axis, y input, and return of S&P on x input. Let me show you the formula which I have used. This is the formula which I have used. Slope, y-axis, return of Amazon, and on x-axis, return of S&P. The same thing I have done with the R-square. Return of Amazon on y-axis and return of S&P on x-axis, x input. So in this way, I got my beta and R-square. And here it's the websites which I've used. Now, in order to find the beta and the R-square, there are two different methods. One that I've already shown you, the formula method, formula of slope and R-square. And the second method is, we have one feature in Excel called data analysis. This data analysis is in data. And in the data analysis, there is an option called regression. When we select regression and put the return of Amazon on y inputs and return of S&P on x input, and then by selecting the confidence interval of 95%, we can get this whole data of R-square and the beta. So you can cross-check, is your beta and R-square correct, by applying and using both the methods, the formula method and then this regression method. In my case, in Amazon company, my beta and R-square are matching. You can see R-square is this 0.8196, which is same here, 0.81963. And for the beta, it is 1.00306, which is over here. And in regression also, I got the same data, 1.0030583, which is over here. So in this way, by applying both the methods, I can tell that my beta and R-square are perfectly correct because I got the same answers using both the methods. This is the small graph which you will get by plotting your returns and S&P returns. In this, you can draw the straight line matching the plots. Now let's move on to the cost of debt. How to find the cost of debt? In order to find the cost of debt, I have used yield to maturity and the tax rate. As my professor taught me in class, there are three different methods for cost of debt. One, you can ask the investor banker regarding the current coupon rate. And second method is you can apply the yield to maturity rates. Like I've used my company's yield to maturity rate of 2021, which is 0.406. And it should be similar to the other year. Like this rate is similar to the year 2022. And the yield of maturity rate is 0.637. And the bonds, there is a website called finramarkets.morningstar.com. Here you have to write your company's name and you will get this bond results. This is like yield to maturity, and then I multiplied it by 2 because the similar of the 2 years it is. And also you have to find the effective annual tax rate. The effective annual tax rate for my company is currently it is 31st December 2019, because 2020 year is not over, so I have to use 31st December 2019 annual effective tax rate, which is 16.99%. And the formula for cost of debt is yield to maturity rate multiplied by 1 minus tax rate, which I will show you. It is over here. See, it's the same, yield to maturity multiplied by 1 minus the tax rate. So in this way, I got my cost of debt is 1%. For the tax rate, I use this website, csimarket.com/stocks/single profitability ratios. Now let's move on to my another slide. There are 3 methods for finding out the cost of equity. First one is CAPM, capital asset pricing model, which is second is DCF, and third one is bond yield plus risk premium. I will show you all the 3 methods step by step. The first one is capital asset pricing model. As we all know, this is the standard and patent formula: risk-free rate plus beta multiplied by the market risk premium. So here we have to find the market risk premium. So I found the market risk premium March 2020 7.02. And for the risk-free rate, I have used the 20-year US Treasury rates. So the Treasury 20-year rates are, I've used the latest one for May 8, 2020, which is 1.12%. So applied it in the formula, like I've used yield on the 20-year US Treasury as the risk-free rate. So risk-free rate plus beta, which is 1.0031, which I already shown you how I found it, and then multiplied it with the current market risk premium. So let's see, here it is. 20 US Treasury, that is risk-free rate, plus beta multiplied by the market risk premium. So my cost of equity for the capital asset pricing model is 8%. Here are the websites for the Treasury. I've used this website, www.treasury.government/resource1. And for the market risk premium, I've used the website Market Risk Premium. Second method is DCF, cost of equity. In DCF, cost of equity, we need dividend, current price of stock of the particular company, and third one is the growth rate. In my case, like in case of Amazon, I searched in all the websites. I did not found the dividend because they said the Amazon has not paid dividends since years. So my dividend is zero. And also, since my dividend is zero, my payout rate is also zero, which I've shown here. Dividend zero, payout rate zero. So in order to find out the growth, there is one equation, 1 minus payout rate multiplied by the ROE, return on equity. Since my payout rate is zero, so what the return on equity rate is my growth rate, which I will show you here. The growth rate, this is the formula which I've applied, and I got my growth rate. Sorry, this one. I got my growth rate which is similar to my return on equity because my payout rate is zero because my dividend is zero. In order to find the return on equity, I use the website finbox.com. Here it shows the return on equity, 31st December 2019. And now for the DCF, cost of equity, the equation is dividend divided by current stock price plus the growth rate. Dividend, my dividend is zero, as I said. Current stock price, my current stock price is this, 2379.61, which is of 8th May, closed 8th May. So I've applied it in the formula, dividend zero divided by the current stock price, which is 2379.61, plus the growth rate, which I found out, which is similar to my rate of return on equity, 21.90%. So in this way, I applied all the numbers in the formula and I got my growth rate, return on equity, cost of equity, 21.90%. Let's move on to the third and last method for finding out the cost of equity. That is bond yield plus risk premium. This method is simplest of all the three. Only you have to add cost of debt plus the market risk premium. That's all. And already we have found the cost of debt earlier, which the same amount I have applied over here. And also I found the risk premium for my DCF. Yeah, for my CAPM, cost of equity formula. So it's easy here. I just added my two numbers, that is cost of debt plus market risk premium. Let me show you. This is the formula for bond yield plus risk premium. And in this formula, I have applied the numbers of cost of debt plus risk premium. So in this easy way, I got my bond yield plus risk premium, which is 9%. You can see how we can get three different returns, that is cost of equity, by using three different methods. In the CAPM method, we got it 8%. In second method, we got 21.90%. Wow, that's the highest. And in third method, we got like 9%. That is bond yield plus risk premium. Now let's move on to the weighted average cost of capital. Excuse me. In this, you need to find the book value weights, book values numbers, and the market value numbers. Excuse me. Book value numbers you can get straight from the balance sheet, and the market value numbers you can get from the yahoo.finance website. So for the WACC, there are two important components, like the equity amounts and the debt amount. So for the debt amount, I've used long-term debt as guided by my instructor, and for the equity, I've used retained earnings and common stock for my book value weight, which like all the three, these are the three amounts which I got straight directly from my balance sheet, Amazon's balance sheet of 2019. So these are all the numbers. I did total of all the three in order to find out the weights of each particular thing. Like in order to find out the weight of long-term debt, the amount of long-term debt, divided it by the total of all the three. I will show you how I did it. See, long-term debt divided by the total. In this way, you can get the weight of each particular amount, if each particular thing. I found the weight of long-term debt, retained earnings, and common stock. I divided the amount of retained earnings by the total to get the weight of retained earnings, and I divided the amount of common stock with the total in order to get the weight of the common stock. Here, for my common stock, I multiplied the amount of common stock with the current market value rate, which I already shown you, that was 2379.61. So in this way, I found out my book value weights of each particular item. Now let's move on to the market value weight. In order to find out the market value weight, I used the website Yahoo Finance, and in that I used statistics for the balance sheet. I got like balance sheet of my Amazon company. So in order to find out the market value weights, it's the same. Like there are two important components, debt and equity. So I found out my long-term debt. Here are the numbers, retained earnings, and market capitalization. I took market capitalization because market capitalization is the total of all the common stock earnings. So I took market capitalization in my market book, in my market value weight, which is market capitalization, like I said, is the total of all of the common stocks value. So I can get a huge number for my equity as in form of market capitalization. Same thing, in order to find the weights of each individual item, I divided my long-term debt with the total, retained earnings amount with the total, and market capitalization amount with the total. So I got weights of all my each individual item, which are here. And these are the balance sheet of my Amazon, which I found out from the current 10K. Here are the numbers. Here is this pic is from the Yahoo Finance. This is market capitalization rate. So now, in order to find the WACC, we have to apply this weights, individual weights that we found out with the cost of equity and cost of debt weights. So three cost of equity, I found out CAPM, DCF, and bond yield plus risk premium. I found the average of all the three. This is the average. This is my average of all the three methods which I had already shown you. And this is my amount of cost of debt, which I shown you how I calculated it. And now in order to find the WACC book value weight, I have to multiply my long-term debt weight with the cost of debt and my retained earnings plus my common stock weights. I have to add them all and multiply it with the average of all the three methods: CAPM, DCF, and bond yield plus risk premium. Then I have to combine the two of them, like the debt plus equity. I have to combine it. And then at the end, I have to multiply it by 1 minus tax rate. So here is the formula. Long-term debt weight amount multiplied it by the cost of debt. This is the debt, and now moving on to the earnings. Retained earnings plus common stock weights multiplied by the average of all the three methods, and then combining the debt and equity, and then multiplying it by 1 minus the tax rate. Tax rate, I already shown you how I found out from the website. Same thing, we have to apply it to the market value weights. Long-term debt weight percentage, multiplied it by the cost of debt. And then with the earnings, that is market capitalization and retained earnings, weights, combine these two weights and then multiplied it by the average of all the three methods, and then add the debt and the equity, and then multiplied it by 1 minus tax rate. So this is the thing. As you can see on the screen. I know it's little complicated and tricky, but once you start applying it, it becomes easy. So now, moving on to my last slide, that is the cash flow estimation. For my cash flow estimation, I got my inflation rate, growth rate numbers from my professor, and I've applied it over here. Let me explain with the NOWC, net operating working capital. As guided and instructed by my professor, I had to apply net operating working capital 10% on my sales amount. So 10% multiplied by my sales amount, I will get my net operating working capital. I will show you how. See, 10% multiplied by my sales amount. So in this way, I found net operating working capital of all the 11 years. And then moving on to the second item, that is units sold with 7% annual growth rate. In order to find out this value, number of units sold multiplied by 1 minus growth rate 7%, which was already given by my professor. Let me show you how I did. Sorry. So units sold 1000 multiplied by 1 minus the growth rate, annual growth rate 7%. In order to find for all the years, I applied the same rule and formula, whatever you see. And now for the price per unit, that is $220 was given in my problem, and also the cost per unit 140 was also given in my problem. In order to find the price for all the other years, I used price 220 multiplied it by 1 into the 3%, 3% inflation rate. Let me show you how I did it. Price per unit 220 multiplied by 1 plus 3% inflation rate. You will get, applying the same formula, you will get it for all the years, for all the 11 years. And also for the cost per unit, you have to apply the same formula. Cost per unit amount, that is $140, multiplied it by 1 plus inflation rate, that is 3%. This is the formula which I used. Since it is the cost, you have to deduct it. And now, moving on to the sales. As we all know, the basic formula for sales is units sold multiplied by the price. Let's see. Yes, units sold multiplied by the price per unit. You will get your sales amount for all the years as and when you apply it to the particular year. And now, moving on to the variable cost. In order to find the variable cost, units sold divided by cost per unit. Let's see. Yes, units sold multiplied by the cost per unit. You will get the variable cost. And now the important thing is depreciation. In order to find the depreciation rates, I have used Mars depreciation rate table. As my instructor particularly told to use for the 10-year. So I have applied the depreciation rates for the 10-year. These are the 10-year different depreciation rates to my fixed asset investment amount. So I got, here it is. Fixed asset investment amount multiplied by the depreciation rate. Depreciation rate of all the different 11 years. In this way, I got my depreciation amount of all the 11 years. Next thing comes is earnings before income and tax. Now, in order to find the earnings before income and tax, you have to add the sales amount, variable cost amount, and the depreciation. Like you have to deduct the depreciation. Let's see. Yes, earnings before income and tax, sales plus variable cost minus the depreciation. You will get earnings before income and tax amount. And now the tax rate, the tax thing is, has in my problem, my tax rate was 40%. So I have to apply my tax rate 40% to my earnings before income and tax. Let me show you. 40% applied to the earnings before income and tax amount, you will get your tax amount. This way I found out my tax amount for all the 11 years. Next thing is net operating profit after taxes. So in order to find the net operating profit after taxes, you have to deduct the taxes. Let's see. Here, I did sales plus variable cost plus depreciation minus tax. Minus tax so that we can get net operating profit after tax. I've already got earnings before income and tax, interest and tax. Now, in order to find the after tax, I have to deduct my tax amount and add my sales, variable and depreciation amount. So in this way, I got my net operating profit after taxes. Now, the next thing is we have to add the depreciation in order to find the total project cash flows, like the operating cash flows. Excuse me. So I have added my depreciation in order to find my operating cash flows. The last thing is cash flow due to change in working capital. In order to find out the cash flow due to change in working capital, I have to deduct previous year's net operating working capital with the current year's net operating working capital. Let me show you. B20, this is my previous year's net operating working capital. Deducting it from the current year net operating working capital, I will get my cash flow due to change in working capital. So in this way, I got my total project cash flows of all the different years. And now in order to find the NPV and IRR, I can use my total project cash flows with the NPV and IRR rates. So in order to find my NPV, I used WACC of the market value rate, which is this one, 10.76338%. I applied it with the NPV formula, that is equals to NPV, the WACC market value rates, and then I've selected all my operating cash flows. And at the end, I've added my fixed asset investment. In this way, I got my NPV. Same thing I did for my IRR. IRR rate was given. So let me show you with the formula. Is equals to IRR, and then I selected my total project cash flows. So I got my NPV and IRR by applying the formula to the total project cash flow rates from year 0 to year 11. I mean from year 1 to year 11. So these are my NPV and IRR rates. These are the cash flows of all my 11 years. Depreciation rate table here. The inflation rate, growth rate was given by my professor. And now in order to find out gain on sale of investment, I have to deduct my fixed, like the initial investment that was 60 lakhs given by my professor in the problem. I deducted it with my book value. Let me show you. Yeah, 60 million subtracted from the book value. This is my book value rate, and in this way we can get the gain on sale of investment. And for the tax on the gain, I've applied 40% on gain of sale of investment amount. So this is my tax on the gain. Now for finding the cash flow from the sale of the equipment, I have to deduct gain on sale of investment minus the tax on the gain. Let me show you this amount of this. So this is my cash flow from the sale of the equipment. Last thing is, in order to, I found out my book value rate by deducting all my depreciation rates of all the years till 11th year from the fixed asset investment rate. In that way, I got my book value rate. Fixed asset investment rate, investment amount, deduct less accumulated depreciation. In this way, you will get your book value rates. One last and important thing, for finding out the 11th year depreciation, I multiplied it by the 0.5. Otherwise, I would get my book value 0. We have to assume that this will go on for further years. This is not the end. This will go on for the further years. Like I will show you how. See, I multiplied it by 0.5. The 11th year depreciation rate was 3.28, multiplied it by 0.5. And just to avoid the book value 0. So this was all my calculations of the Excel part. The same calculations I've explained in Word. Let me show you. So this is my word part. I've written how I perform my calculation in Excel in my word part. I've shown all my calculations using in words, and I've also highlighted the website which I used with all the formulas that I used. And also at the end, I've shown the cash flows and everything, my NPV and IRR rate. And at the end is the references like the uh, screenshots and websites of each individual item that I found. So this is it. So this was all the project. I was the financial manager for the Amazon company, and I have to run out all my calculations, cost of debt, cost of equity for the Amazon company, which I did, and how I did, I showed you in my presentation. So I would suggest with this NPV and IRR, I would suggest we should move on with the project. Thank you for listening my presentation. I hope you all enjoyed it. Thank you so much.